C3.ai offers enterprises artificial intelligence services to improve their operations. It's similar to what Palantir does, but at a less effective scale. The company is scheduled to report quarterly financial results after the markets close on Wednesday, February 26, 2025. And so investors are interested if they should buy this AI stock before it announces earnings. I'll answer that question in this video, and I'll also preview what investors should look out for from C3.ai when it announces earnings. And I'll share with you my discounted cash flow model, which reveals the intrinsic value per share, what I think the stock is worth today. So let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the things I've been very impressed with C3.ai is how it's accelerated revenue growth in the last 2 years. Here's a chart of its revenue growth going back to its fiscal year 2023 fourth quarter. You could see that it grew revenue flat. It wasn't demonstrating any growth at that point in time. Since then, revenue has accelerated, growing 11% in Q1 24, up to 17% in Q2, up to 18 in Q3, and 20 in Q4. And then so far in its fiscal year 2025, which is different than the calendar year, the company's growth rate has continued to accelerate, rising to 21% before jumping to 29% in the most recent quarter. The company has employed a similar strategy to what Palantir has employed, in that it goes out to enterprises and it tells them, let us show you what we can do. And you don't have to pay us, just let us show you what we can do. And then after we show you what we're capable of, then we'll ask you to pay. Then we'll ask you to sign a deal with us. But first, let us show you. And so that strategy is similar to what Palantir has done, and it's worked wonders with enterprises. The businesses get to see real life tangible results from these services, and then they become more interested in purchasing the service after they can see how much it's going to save them on cost, or how much it's going to gain them on revenue, how much it's going to lower risk and volatility, or whatever the benefits that will be provided. Once they see the tangible results, they become more interested. Now, surprisingly, despite these excellent results, C3.ai's share price is only up by 9.85% in the last year. Usually, when I see a business demonstrating that kind of performance improvement, accelerating revenue growth for several consecutive quarters, increasing the second derivative by that many quarters, usually when that's going on, especially for a software as a service business, the share price would be soaring, right? But for C3.ai, it's only up less than 10% in the last year. And part of the reason for that is the stock was already so expensive to begin with. It was one of those super premium valuation stocks because of all the enthusiasm surrounding artificial intelligence. A couple of other names in this category include SoundHound AI, Big Bear AI, and even Palantir to some extent is trading at this super premium valuation because the market's anticipating excellent results. And sometimes, in the case of C3.ai and SoundHound AI and Big Bear AI, the market is buying up shares of these businesses before they demonstrate these results. And so when the results come in, it's already been priced into the stock, and so it doesn't improve the stock price. That's why I've cautioned so many investors to pay attention to valuation, because valuation can make an excellent business a poor investment if it's too expensive. I'm not saying that's the case with C3.ai right now, but it was the case more than a year ago. Before it started to accelerate these revenues, the stock was trading at a super premium valuation before they delivered any of those results. So those results were already priced into the stock a year and a half ago. And now that they delivered the results, you can see the stock price hasn't improved, even though those results are absolutely excellent to accelerate revenue growth for that many consecutive quarters. That being said, the company's forecast for this upcoming quarter is for revenue growth to stop accelerating, which would be a really big letdown for C3.ai. They're forecasting that revenue will grow by 25% at the midpoint in the upcoming quarter. And of course, I already shared with you in the most recent quarter, they grew by 29%. And they've been on a streak of several consecutive quarters of accelerating revenue growth. So if they do hit 25% at the midpoint as they are forecasting, it would be a disappointment. And they're forecasting similar growth rates for the full year in 2025. Although C3.ai does have a reputation for sandbagging the revenue guidance, in other words, giving a lower guidance and then beating the guidance, they like to brag about beating expectations. I'm not a fan of that. If you haven't already heard, I don't like when companies sandbag or give you a lower guidance and then beat the guidance and then tell you, look, we told you this and we beat expectations. I also don't like when management continuously overpromises and underdelivers. Tesla is a prime example of that. I don't like either side of that, right? What I like from my management team, if I'm a shareholder of a business, what I like from my management team is accurate reporting, accurate forecasting. Tell me what you think the forecast is in the quarter ahead. Don't try to be low and then beat the expectations, and don't consistently be above and then be below expectations on the report. If you have a reputation of beating expectations, it's probably because your guidance is too low to begin with. Your guidance should be higher to more accurately reflect what your revenue looks like in the upcoming quarter. That's what I like to see from management teams, is actual guidance that meets the revenue accurately. And so I want to see an equal number of beating expectations and missing expectations, because that tells me the management team is accurately forecasting their revenue. If they're consistently beating expectations, that means they're consistently sandbagging the guidance, and vice versa. In Tesla's case, it's the opposite. They consistently tell you they're going to do something and then they deliver like something way lower. I don't like either side of that. C3.ai is now trading at a forward price to sales of 8.5, which is still relatively expensive in this business at this magnitude, at this stage of its growth. And similarly, when I did my discounted cash flow valuation model for C3.ai, I did this model on February 8th, 2025. I found the shares to be relatively fairly valued. So my intrinsic value per share calculation had the stock worth $32.81. Its current market price is $31.56. So the stock, I would say, is between fairly valued to slightly overvalued, depending on the valuation metric you consider. And so to answer the question, should you buy the stock ahead of the earnings release? In this case, I would say no. I would say it's more prudent to wait for the earnings to come out, digest the results, and then evaluate the business afterwards. It's especially risky for companies that sandbag their revenue guidance, because the market now, because C3.ai has a reputation for beating expectations, the market will now be expecting something that's above the guidance that C3.ai provided. And so if they miss that guidance, you can expect a huge decrease in the stock price. If you recall, in the last week, that's what happened to the trade desk. The trade desk also has a reputation of sandbagging guidance. And then in the most recent earnings release, they missed their even low expectations. And that caused the stock price to crash almost 30% following the results. C3.ai has a similar reputation of sandbagging. So the risks are, in my opinion, more so to the downside than to the upside. This is a situation to wait, earnings to come out, digest, and then make a decision. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.